For years, people weren't just buying watches. They were buying into a belief. A belief that owning a steel sports watch from Rolex wasn't just a purchase. It was a financial move, something closer to an investment than a luxury item. The idea was simple: get access, secure the piece, and profit later. But that entire mindset, it's collapsing. Right now, a lot of people holding modern pieces are quietly realizing something uncomfortable. The value they thought was guaranteed isn't there anymore. What looked like easy profit has turned into dead weight for many buyers. This isn't just a slowdown, it's a reset. If you go back to that 2020 to early 2022 period, the market was running on pure momentum. Almost anything with that crown logo could be flipped instantly, sometimes for double the retail price. It created a wave of new buyers who weren't collectors, they were speculators. And most of them never experienced a real downturn. Now they are. As we move into late 2025 and beyond, the money that once fueled this market has dried up. And to understand why, you have to look at what changed behind the scenes. One of the biggest shifts is what analysts describe as a broader economic squeeze. Interest rates climbed, liquidity tightened, and suddenly, holding luxury inventory became expensive. Before, dealers could sit on watches comfortably. Now, every unsold piece costs them money every single month. That pressure forces them to move inventory faster, even if it means taking losses. And when dealers start lowering their expectations, the entire market follows. At the same time, something else broke: the connection between watches and crypto wealth. There was a period where those two moved almost in sync. When crypto surged, so did watch prices. But that link isn't working anymore. Even when digital assets spike, that money isn't flowing back into watches like it used to. And that brings us to the part most people don't see coming: the moment you try to sell. There was always this assumption that dealers would take anything off your hands, that they were the safety net. But now, that safety net has disappeared. Walk into a shop today with a standard modern piece, and there's a real chance they won't even make an offer. And if they do, it's going to be far lower than what you paid. Dealers aren't being difficult. They're protecting themselves. Cash flow matters more than ever, and they won't tie up money in something that might sit for months. This is where reality hits hardest: the numbers. A lot of people look at listings online and assume that's what their watch is worth. But that's just an asking price, not what someone will actually pay you. In a weak market, that gap, the spread, becomes much bigger. Take a typical scenario. You buy a watch at retail, thinking you're in a strong position. The moment you step outside the store, you're already facing a significant loss if you try to sell. And even if you go the private route, the costs add up quickly. Platform fees, shipping, insurance, taxes, all of it eats into whatever margin you thought you had. What used to feel simple now feels like a risk. And not every model is affected equally. Some watches are struggling far more than others. Entry-level pieces that once had huge demand are now sitting near retail, sometimes below it. Larger, more expensive models, especially in precious metals, can be even harder to move, with buyers hesitant and dealers cautious. There's also a growing inventory problem. Listings are increasing, but transactions are slowing down. Sellers don't want to accept lower prices, and buyers know they can wait. That creates a standoff. And when nothing moves, the market freezes. Now, there are still a few exceptions. Certain highly sought-after models continue to perform well. But here's the catch: most people can't get them at retail anyway. And if you're buying them at already inflated prices, the upside is almost gone. So while it might look like some parts of the market are strong, for the average buyer, it's a different story. At the same time, the brand itself hasn't slowed down. Retail prices continue to rise even as secondary prices drop. That gap removes profit opportunities for flippers and shifts the advantage away from the resale market. On top of that, official pre-owned programs are creating a new layer of competition. making it even harder for independent dealers to operate the way they used to. And then there's production. Supply is increasing, wait lists are shrinking, pieces that once felt impossible to get are becoming more accessible. And when access improves, exclusivity fades. All of this leads to one thing: a shift in mindset. More buyers are starting to understand that most modern watches aren't assets, they're expenses. The idea of easy profit is fading, replaced by a more realistic view of ownership. You buy it because you want it, not because you expect it to pay you back. Looking forward, there's already a noticeable change in direction. Interest is growing in older pieces, watches with history, character, and a different kind of appeal. At the same time, younger buyers are leaning toward cleaner, smaller designs from other brands, moving away from the oversized, hype-driven look. So if you step back and look at the full picture, three things stand out clearly. First, the easy money era is gone. The conditions that drove rapid price growth simply don't exist anymore. Second, dealers are operating defensively. They're selective, cautious, and no longer acting as a guaranteed exit. And third, the numbers don't support the old strategy. Between pricing, spreads, and selling costs, flipping has become a losing game for most models. The market hasn't disappeared. It's just returned to what it always was. A luxury watch is something you enjoy, not something that quietly prints money while you wear it. So now the question becomes simple. If you had money to spend today, would you still take the risk on a modern piece, hoping it holds value? Or would you go for something that's already found its place in the market? That decision right there says everything about how much things have changed.